All right, hello, welcome back into the Fast Track Inner Circle. This is the daily recap for Thursday, October 6th. Another slow session again here today. Very low volumes. Not a lot going on intraday. We got into the noon hour and things just died right off today. And that's really to be expected with the news events that we have on tap for the next 24 hours. We have the employment report out tomorrow morning at 8:30 Eastern. It always comes out on the first Friday of the month, and it's typically a big market mover. We typically will see a lot of big movements pre-market, and really that's due to the Fed putting so much weight on that report. We know the Fed, their statements on interest rates, they're very important. The market has put those at the top of the list and main focus here over the past couple of years, but specifically here over the past couple of months. So we'll want to see how that report affects things, how it impacted us today. Just a lot of wait and see price action today on many charts. We had a couple of areas where we had some movement. We'll talk about those in a second. Twitter had a pretty active day. The energy names and some of the financials, we had some movement there today. And we'll talk about those in just a second. But really, we want to wait and see what happens here tomorrow morning. I do think that'll give us the catalyst that we need heading into next week for more of a breakout move. We've been talking about the sideways movement here over the past, really for most of this week in the daily recap videos, how that coiled spring on the daily charts, which you can see here now, that spring just keeps getting tighter and tighter. It's just wound up, and I think it's going to pop. Whether it be due to the employment report tomorrow, or if it's going to be the earnings releases that are upcoming over the next few weeks, I do think we'll see a decent sized move. I do think it's going to be to the downside, in my opinion, just due to the lack of fear in this market and what the VIX has done. We're at such extremes on the low end of the VIX range that I do see fear kicking back into this market here very soon. If it does break out to the upside, I mean, we'll do our best to take what the market's giving us, of course. But I'm anticipating a move to the downside here over the next week or two. Also, today with the slow price action this afternoon, everybody's focus just seems to be on the hurricane down in Florida and on the East Coast, and rightfully so. I mean, it's a pretty nasty storm. So if you're in Florida, forget about the markets. I mean, you can come back to that here next week and get in sync. Stay safe, and hopefully that storm does not end up being a direct hit on the state of Florida. That could be a pretty nasty situation. So if you're in Florida, stay safe. That's for sure. So everything that we talked about the last few days on the daily chart of SPY still holds true. I mean, we've just continued to be pinned inside of these moving averages like we've talked about the last few weeks. Until those levels break, I mean, we can just anticipate continued chop, continued sideways price action. You can see down at the bottom, the volume continues to trend lower. Not something we want to see, right? I've had a couple of emails come in from people here this week saying, Mike, I'm placing these orders, my price is being hit, but I'm not getting filled. What gives? Well, you've got to remember, in a period of low volume like we're in now, you're not guaranteed fills. Just because your price is hit, you've got to have somebody on the other side of your trade willing to take that trade, right? When volumes get this slow, I know everybody loves the never-ending bull market. This is what makes it tricky. As active traders, we want that big volume. It just makes it easier for us to get in and out of trades at good prices. So we really want to see those volume numbers, as I've mentioned here recently. In a perfect scenario, perfect world, we'd like to see that average creep back up above 150 million shares on SPY. That would be beneficial for all of us. If we take a look at the internals, very mixed today. Volume ratio minus 1.2 to 1. Advanced decline line at minus 300. Very difficult to get a read on either one of those numbers. I mean, it's just very typical of a slow, choppy sideways market. That's what we've seen here the last few days. I do expect a different market tomorrow, at least for the first couple of hours of the day after the big news out pre-market. So we'll see. We'll see if the internals will give us a little bit more to work with. I mean, we had a couple of moves this morning. We had a minus 1,000 tick reading right around 11 o'clock. You can see that move on the 5-minute chart of SPY if I zoom in here a little bit. You can see that push to the downside right around 11, and then that got followed up by a bounce to the upside, and we got an extremely strong tick reading just before noon, plus 1,400 on this push to the upside. The rest of the day, pretty much a non-event. I mean, we basically moved sideways the rest of the day. So Just a very boring session, no doubt about it. More of a session where we just need to manage open positions. And what I want to do when we get over to the charts here, let me pull up the daily recap spreadsheet. I'm just going to use Thinkorswim as our example here. So if we take a look, I've had some questions from people on this here the last couple days. The way that you're going to read this, we've got two different workspaces going right now. We still have some trades that are going off of the third quarter charts, right? So I've got a column on the spreadsheet, the workspace column. It tells you what quarter we're looking at. Most of our list is already on October, November, December, with a handful of exceptions. We've got the Dow ETF, EEM, Fitbit. We've got QQQ, Starbucks, Solar City, Tesla. We've got a handful of names that are still going off of the third quarter charts. Until those trades complete, we cannot move forward completely to the fourth quarter charts. So any trades that you opened up over the past couple of weeks, make sure that those trades close before you update those specific charts. If you update them too soon, your targets and stops could potentially change, and that's not something we want to deal with. So just wanted to point that out on the spreadsheet. If you just joined here recently, there's no reason for you to load up both workspaces. Your focus from this point forward is going to be on the fourth quarter charts. You don't need to do a single thing with those third quarter charts at this point. So taking a look at a couple of these setups here, let's take a look at the Dow ETF specifically, because I know there's a couple of people that I've talked to in this trade. You can see that the long trade is still in progress. Until this trade hits a stop or a target, okay, we're going to still look at this chart, still look at the third quarter chart. So we want to make sure that we lock in those targets and stop. And until one of those levels are hit, we're still in the trade. So long call position, long call spread still in play, and we'll continue to track this one going forward. QQQ, speaking of the index ETFs, opposite position on the NASDAQ ETF. Right, we've got a short trade in place. It has not hit a stop or a target yet. So just like the Dow ETF, we have to continue to look at this chart until it completes. We cannot move forward to the fourth quarter charts until this trade does complete. And I've talked about this earlier in the week. What if you have the Dow ETF and QQQ on your watch list? Okay, one's in a long trade, one's in a short trade. Do you take both? Do you take one over the other? If they're both on your list, you have to take both. Even though they're conflicting trades, you just don't know which way the market's going to go. There's probably a good chance that one of these trades is going to win and one is going to lose. We just don't know which one is which, right? So you've got to make sure that you're taking all trades as they come. The minute you start to filter out trades or you skip trades, maybe you say, hey, I want to be bearish, I don't want to be bullish, so I'm going to take one over the other. The minute you start doing that, you're trading a completely different system than what was designed. So any name on your list, you have to take those trades as they come. And long term, if I take a look at my historical results, it's not uncommon for me to have long trades on, short trades on. Yeah, I may have some neutral trades on from time to time. You have to take all the trades as they come, right? And a diversified watch list, you are going to have a mix of setup types. So just keep that in mind and take those trades as they come. You can absolutely adjust risk if you wanted to. If you want it to be more bearish than bullish, okay, maybe you're in long puts on QQQ and maybe you're in a call spread on the Dow ETF. Okay, that call spread is going to be a little bit more conservative. The long puts on QQQ is going to be more aggressive. That's something you can do. What you don't want to do is just be stuck on the sidelines filtering out trades. I can't stress that enough. All right, let's move forward to the fourth quarter. Actually, let me wrap up a couple of these. Let's take a look at BA. We covered this in the training room today. I wanted to cover it here again on the recap video. We even talked about it yesterday, but the key thing to remember here on BA, I've had some questions on how to manage the trade. What types of position sizes do you use? What's the formula there? How do I determine how big of a position I'm going to take? It's going to be different for everybody, depending on your account size, depending on your risk tolerance. Ideally, I'd love to have you trading products where you can trade multiple contracts. Because once that first target's hit, that gives you the ability to peel off some of your trade, lock in some profit. That's exactly what we did at the first target. I had multiple contracts on. I closed out of half of my trade there at the first target. I moved the stop up to break even on the remainder of the position. And then notice what happened as we started to move up towards that second target, the stop moved up. Okay, so along the way, we were locking in profit on the second half of the trade. Now, ultimately, it didn't matter. We were able to book that full profit winner at that second target. So we are now flat. This chart is done forever. Okay, our next trade on BA is going to come off of the fourth quarter charts, which I'll load up now. Now, I mentioned there was a couple of areas, even though the market was extremely slow today, just not a lot going on anywhere, we did have some decent movement in a couple of positions. The financials, which we're going to talk about here in just a second, had some decent movement. The energy names for part of the day, they were active. In the case of Chevron, if we take a look at our short trade here, the problem with the Chevron trade, we're still underwater. We have not been able to battle all the way back to the entry point yet. We're just slightly above it. So as we talked about yesterday, ideally we really want this thing to head lower, right? I mean, we're in a bearish position, whether it be a long put or a put spread. We have our bearish position on looking for a move lower. In this slow market environment, this is where it's just a test of patience, and you have to wait for a stop or a target to hit. I keep saying that, but I keep talking to people that are saying, you know what, Mike, the trade didn't work out fast enough. I'm going to get out of the position. I don't like the trade any longer. It's taking too long. Until this trade hits a stop or a target, you have to be in it. So 99.67 and 98.5 are the targets. 104.17 is the stop. So I still like this position. I mean, just look at the previous long trade. I mean, we had to survive that sideways move for a good week or two before it finally broke up to target, right? Okay, here on the downside, this is a very typical pattern of many trades that we have over time. We get triggered into trades, they just kind of chop around or even pull back on us initially, and then after being patient, they move down to target. So I'm still in the trade. I still like the Chevron position. We're just going to have to wait and see how the week wraps up tomorrow or even into early next week. The financial names, Goldman Sachs. The financial names all over the place. They were lower earlier in the session. They rallied back up. They really led the charge in the overall market to the upside. Our Goldman Sachs trade that we talked about here yesterday, we were just missing out on that first target come yesterday at the close when we recorded the video. I mentioned any type of an up open today, and we were going to be able to close out of half of our trade, move the stop up. That's exactly what happened. We opened this morning, hit that first target, so I closed out of half of my call spreads, booked the profit, really nice quick trade. Ultimately, my full target's up at 169.19, but my stop has been moved up to 163.75 on the second half of my trade. If you are not able to trade multiple contracts here, the only thing you're going to do at first target is move the stop up to break even. Trading a single contract, you really need to make sure you're giving that trade a chance to hit that second target. Okay, so really nice trade, and we closed up near the highs of the day, so we still have a really nice profit going on Goldman Sachs. The clock is ticking, most definitely. If we take a look at the earnings release dates, we've got about 12 days left on Goldman Sachs. The earnings are out on the 18th. So it's still time. We don't have to rush here. We can still hold on to it into next week if need be. But if we do just kind of chop sideways over the next week or so, once we get 24 hours out from earnings, I have to make sure I close the position out, regardless if a stop or a target has been hit. So that's how I'm going to handle Goldman Sachs, and we'll talk about that over the next few days, just to make sure everybody's clear on that. Wells Fargo, a very similar looking chart on Wells Fargo. We talked about this trade yesterday as well. I mentioned on both of these, I mean, because we're heading into earnings, we're about 10 to 12 days out. If you wanted to avoid these, that's fine. I mean, we talked about that, how it's oftentimes in front of earnings, things start to get choppy. And if you stayed on the sidelines, I'm not going to fault you for that or get mad at that. I mean, that's perfectly fine. In both of these cases, they have both hit the first target. We just talked about Goldman, and here's Wells Fargo. So if you took the trade here yesterday, you're already booking profit today. That first target was hit, so you would have closed out of half of your position, moved the stop up to break even up to 44.71 on the remainder of the trade, and ultimately our full target's up at 46.07, which we're just going to have to be patient here and see if we can get another push higher. With the employment report out tomorrow morning, I would look for the financials to be very active first thing. So we'll have to watch these closely as we head into Friday's session. So the financials, pretty nice stretch here. We're starting to see a number of markets with very strong extremes. If I take a look here at Citigroup, okay, we've seen a heck of a run to the upside, right? We are overbought. I would love to see this thing pull back and give us a short trade. Now, the timing of that's going to be a little tricky because we have earnings upcoming, but I'm looking through these charts and I'm saying, look, the market's pretty slow, but we've got some very strong extremes. If we take a look at TLT and the gold ETF, pretty strong moves to the downside where we're approaching some oversold levels. So I'm liking what I'm seeing, even though it's slow here this week. I'm liking how this is setting us up for the next week or two because we have so many extremes on many names here. And with that daily chart of SPY that we talked about earlier, that coiled spring pattern, if we get that breakout move, we are going to be extremely active over the next week or two. And for those of you that are newer to the system, that's a good thing. That's exactly what you want to see as newer traders, right? I mean, you want to see some return out of the system. So gold ETF, very similar, very oversold. Gold has gotten beat up pretty big here over the past week or so. So I like that one for a reversal. Twitter. Had some questions on Twitter. Why is it a difficult product to trade? I mean, why don't I trade it personally? Well, look at Twitter today, down 20% today alone. This is a very news-driven stock. I mean, everybody's talking about takeover rumors and who's going to buy Twitter, and the problem was Disney came out today. No interest in Twitter. A couple other companies that have shown interest in the past, I mean, all of a sudden are denying that, and look what happens. Sure, you have a 20% move to the downside. If you're in a short position, yeah, there's a ton of profit there. But what happens if you're on the wrong side of that trade coming into today? A 20% move lower, you're facing an instant 100% loss on the option. So just be cautious with Twitter. I'm not saying don't trade it. You want to be very careful. Okay, maybe reduce risk, maybe take it with smaller position sizes, or maybe even replace it on your list altogether. Maybe put on a new name until Twitter kind of settles down a little bit, until some of the news starts to play itself out. Any type of those rumors, anytime you get into an environment where there's rumors that take over, it's really, really difficult. I mean, it's just tricky to know when the news is going to come out. No one knows, and getting on the wrong side of that, it can be painful. So just be cautious if you are trading Twitter right now. All right, so on many names other than our Wells Fargo trade, our Goldman Sachs trade, Chevron, the index ETFs, if we take a look at our position sheet, we have a lot of trades that are currently just kind of in a wait and see mode. A lot of charts that are waiting for new setups. So we'll just continue to be patient along with the market here, and we'll see. Hopefully that employment report tomorrow gives us a little bit more excitement where we can come in and talk about a number of new trades here in the daily recap video. So I'm going to wrap this video up here for today. As always, if you have any questions, feel free to send me an email. I will update the position sheet tomorrow morning before the open. So if you have any questions as to what positions I have on or how I'm taking trades, you can always go to that spreadsheet on the owner's site. So enjoy the evening, everybody, and I'll talk to you tomorrow here after the close as we wrap up the week.